Thank you for joining us as we focus on two critical accounts to review for accuracy prior to closing out your period: vendor payables and credit card liabilities. These two balance sheet accounts can have a monumental impact on your financials if not carefully tracked, reviewed, and monitored on a weekly and period basis to ensure proper use and balance. Every period starts with a review of the current financials. In the case of these two accounts, you would start with the balance sheet and work your way down. You would then identify any areas of opportunity in regards to both accuracy and timeliness. Were all of the invoices recorded? Were all the credits accounted for? Were all of the expenses paid by the credit card entered? Then lastly, you'll take what you learned from the review and identify how to establish and implement best practices and quality procedures into operational behaviors of your team in order to prevent future errors. We'll start with the vendor payables. Vendor payables reflect a balance that is owed to a specific vendor. Understanding what you owe your vendors allows true transparency and visibility into what will leave your account for cash flow purposes. Keeping these accounts clean will ensure that the vendor is getting paid and you have an understanding of what your outstanding balance is at any given time. To prevent this account from showing an incorrect balance, take caution when entering invoices to ensure that the correct payment method is chosen. The most common mistake is when the payment is made and entered as paid by the payable, but when the money actually clears the bank account, the invoice to reduce the payable paid by the debit account is not entered. The question would then show on your bank reconciliation, and coding it to the correct GL is critical, or there's a potential to show an inflated expense on your profit and loss statement. If you do find an error with the payable account, you should first understand what you truly owe the vendor. Log into the vendor portal or contact the vendor and get a list of both invoices paid and invoices outstanding. If the account balance is positive above what you owe, review the trial balance to identify any incorrect coding, and once identified, reach out to the accountant to reclass any incorrect activity. If the balance is less than what you owe, then you'll review the trial balance to identify the incorrect activity, have your accountant adjust the incorrect activity, and if any invoices were coded as paid with the incorrect payment method, you would need to work with your accountant to void and re-record those entries. Vendor payables are a liability. Therefore, any positive amount that will reflect the total balance that you owe to the vendor as of that date. So in this example, we owe FinTech $6,900. If the amount is negative, it means that you either overpaid your vendor, or you forgot a credit, or you're missing invoices, which in turn means that your costs are not reflecting true costs on the profit and loss statement. In order to avoid these issues, work with your vendors to see how you can adjust the frequency of money leaving the bank account to better suit your cash flow and business needs. If they cannot adjust the frequency, see if they have a platform where you can control what gets paid and how often it is paid. Auditing the vendor payables should be part of your weekly submit audit. Review the balance and ensure that all of the activity that is coded as paid by the payable is true. Credit cards can be wonderful for your business for a multitude of reasons, ranging from the fact that they help control cash flow during slow months and they earn you some fantastic rewards. If not tracked, reconciled, and handled properly, they can also create inaccurate financials, which in turn could create a ripple effect of negative activity. Understanding your credit card balance is critical to being able to utilize it when you need it and ensure that you're setting yourself up for a positive cash flow position when you don't. Credit card balances can get out of balance when payments that are entered as paid by the credit card are not entered in. Likewise, if the expenses are entered as paid by the payable, but the payment on the credit card is not entered, then it would cause a bank reconciliation question, and in turn, you would want to make sure you code that correctly. The first step is always to isolate what activity is incorrect. So pull the credit card statement and compare it against the trial balance to determine the activity that's incorrect. If the balance is overstated or positive above what you truly owe the credit card, once you identify the incorrect activity, communicate with your accountant so they can make the appropriate journal entry adjustments. If the balance is less than what you owe the credit card, you would identify the incorrect activity and communicate with your accountant any activity that needs to be added or reclassed. Now, if any invoices were coded as paid with the incorrect payment method, you would want to work with your accountant to ensure invoices are adjusted, and most importantly, all bank activity is reflected correctly. In this example with Citi, I'm showing that I have spent $170.30 on my credit card. Once I pay that balance off, I can just simply enter an invoice paid by the debit to the GL of the payable, in this case, GL 2300. And then it will reduce the liability. With the American Express, I'm showing that I've overpaid my credit card. So when I go back and I need to identify what expenses are missing and ensure that all activity is adjusted to get me to my true credit card balance. Ensuring best practices when reviewing credit cards, such as verifying that all accounts payable credit card activity is accurate prior to submitting for the week, is critical. And most importantly, look at your balance sheet. We say it constantly, but if you don't have eyes on it, you won't know about it. Review your balance sheet on a weekly basis and question everything. Lastly, if applicable, set up your credit card reconciliation so you have another set of eyes and hands helping out. Now let's talk about action you can take today to move these accounts in the right direction. First, review these accounts and communicate any needed adjustments to your accountant. Then complete your bank reconciliation with specific focus on transactions that could impact these accounts. Lastly, communicate any opportunities to your team surrounding both the accuracy and timeliness of financial statements. Thank you so much, and reach out to any member of RASI with questions.